Disappointing business survey news out of Europe set the tone for world financial markets overnight. First flash estimates about the health of manufacturing in France, Germany and the Eurozone in aggregate disappointed analysts. Coupled with this was the fact that the Dutch government couldn't agree budget cuts and as a result has handed in its resignation. New elections are probably to follow in June. The key issue here is that the Dutch economy is one of the strongest ones in Europe, and as a result of this political instability, it casts significant doubts over the Eurozone in general if there is any trouble with Spain. So what impact did this have on world markets? Looking at equities first, the Dow in particular was hit significantly, down more than 100 points, falling through the 13,000 point barrier. European indices fell across the board too, between 2 and 3%. On this side of the world, both the Aussie and the New Zealand markets were relatively flat. News of those manufacturing data had not come through at that point. Looking at currencies, again, we saw the flight away from trading currencies, the risky currencies such as the Kiwi and the Aussie. The Kiwi falling against most of its major trading partners, though having relative parity against the Aussie. It was down to around 81.2 US cents. The downward trend in the international lamb trade has continued over the last couple of weeks, although latterly the slide in scheduled prices has slowed. So what are the key factors that are actually driving the international lamb trade at the moment? The first thing is demand. Demand in offshore markets, particularly the key markets of England and the European Union, are very, very soft. And this has led to significant amounts of chilled lamb actually being frozen, and that frozen lamb building up stockpiles in those countries. Looking on the supply side, although New Zealand's supply of lamb has actually been lower than it has been in previous years, the Aussies, on the other hand, have had a bonza year. Their supply is up by nearly 20% year on year, and this is also coupled with the fact that Northern European producers are now coming back online. Currency is the final factor. Currency continues to be a major bugbear of New Zealand's agricultural producers, and it's significantly eroding processors' margins, which has then been reflected back in scheduled prices. So, what's the prognosis for the future? Well, it's hard to see any of those three factors actually being alleviated soon. One of the key things, though, is that for those farmers who are actually able to produce carcasses less than 20 kilos in weight, there is a bright glimmer of hope there, and there is still some demand.